Gupta is with us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thanks very much for your time. Rana, the more and more, slowly but steadily, the drumbeat continues that, reallocate your portfolios, tilt your portfolios, and, do two things. One, get into names where you're really convinced, and of course, generally be convinced more in the large cap space than in some of the smaller names. That's the general view from the institutional community that we speak with, Rana. Do you share that view as well?
Good morning. Yes, I think that's a pretty relevant point because the market has been melting up because of the flows and lack of, let's say, good quality paper supply from the corporates. So I think to put this in context, let's look at the return numbers because valuation numbers we have discussed often. I think the Nifty in last 2 years has given returns of 20% plus CAGR. That of the mid cap is 40%. Now compare this with the long-term returns. Nifty's long-term return is about 13%, and that of mid cap is 19%. So first point is that the Nifty and NSE mid cap are somewhat they're giving higher returns than their average. Some of it is justified because the macro is improved, corporate profitability is improved, but it may not be all of it. And then secondly, you can see the mid cap over a long period of time has given 1.5x, but now they're running at 2x. So that is because of PE expansion. So could there be some consolidation expected? I think yes, that's pretty much possible. Now, taking a step back, if you look at the market action, and we tend to look at only last 3-4 months. But if you look at even this year, January to June, the market was in a very tight 5% range. So can we go again into that kind of consolidation range at 5% for next 3 or 6 months? That's pretty much possible.
Okay, all right. So, Rana, hi, morning, great to have you on. Just a sense, I mean, if the market, first of all, do you see any immediate downside risks? Any reason to believe that one should be taking some profit off? And if not, then I think then one moves to the question of then how do you add incremental money to the market?
Right. I think the downside, downside risk, right? One reason why one could potentially argue for downside risk is to say that downside could come from the earnings not meeting expectations and valuation too high, so on and so forth. But we think although the micro looks a little soft, earnings will not disappoint by a big margin. Now coming to the flows and the PEs, the valuation, it will not correct on its own. The risk that I see and the valuation where it could correct if the supply of papers overwhelm the demand for equities. And as we understand for the month of October, November, quite a few large IPOs are planned. And we'll have to wait and see how the responses are those two IPOs. If, let's say some of them do not give the expected returns, I think that could cause, that could lead to some soaring of sentiment and therefore some correction in the PE ratios. So that is one risk. Definitely the supply and the valuation of the supply that we're looking out for. Secondly, I would also like to highlight that from here till about February, there are quite a few state elections. Now, we are fully aware state elections do not alter the equation in the central government. Nonetheless, there could be a sentiment impact if the state election outcome were to be adverse to market expectations.
All right. Hi, Rana. Good morning and good to see you. And since you briefly spoke about these IPOs, two IPOs that listed in the stocks ran away was Ola as well as Bajaj Housing from very different sectors. But the stocks ran away and actually from the peak, they've corrected a fair bit. What's your view on a couple of these names? Some of them have big potential going ahead, but they seem to have run ahead of themselves.
So without getting to any company specific, I would say that the IPOs that have come, they are either from very good corporate houses or in a segment which is not very large in Indian markets, not very large float available. Now, investors want to either own a very good corporate issuing paper and or they want to also own these new emerging areas. Now, the thing is that the supply of issuers papers is so low and everyone wants to own. It is the pure demand supply that is taking the price up. I think if you look at any valuation parameters, these would appear to be factoring in like probably FY27, FY28. So that's just happened due to the supply of the supply of papers, but the demand being much higher than that.
Okay. The other sector that sort of we're looking at obviously is on the whole manufacturing side. The big debate has been whether the best of it from a market perspective, from a stock appreciation perspective, whether that's behind us or whether all dips should be bought. So when you talk about a large theme like manufacturing, if you could break that down more in a more granular basis, what's your overall thought? And then if you were to invest again, fresh capital, then what part of it would you be looking at?
No, sure. I think that's a great question, and we have been highlighting, I think, since about April, May, that manufacturing as by and large a big theme is kind of peaking out. Now let's get to more nuanced approach. Let's break down manufacturing into broadly two parts. One, which is impacted by government spend and policy, both. So this will be typically a railway, defense, power segment. These stocks over the last 2 to 3 years have seen tremendous amount of rally, and the valuation there looked very expensive. Now, by definition, all these companies are now factoring in very good execution, but on the ground, that may not be the case. I think these companies will continue to do well as corporates, but the stock price just gone way too high not to justify these kind of multiples. Then come to the other side, which is a policy driven. Now, Indian government has taken several policy in the areas of electronics manufacturing, in terms of, let's say, energy independence, so on and so forth. We see some opportunity there, although I think mostly in the electronics manufacturing, because that's a very large addressable market in India as well as globally. You might have seen that one of the world's largest phone maker is increasing their sourcing from India. So there could be plays around that value chain. So that is something that we like. In the industrial goods area, some of the global companies are increasing their sourcing from India. That is something we like. But I think going to even the energy value chain, I think there also, I think the stocks, because of, again, lack of quality supply available, has run quite a bit ahead of their fair valuation.
If you can quickly pull up the Policy Bazaar stock, I just want to make a quick mention of it. Volumes now are humongous. It's the number one volume-led loser right now on the NSE. And take a look at the cut that's coming through. It's down 5%. Actually, we should put an alert with our story. So that's basically what 16% down in 3 days flat. 1634. Rana, I don't want you to comment on Policy Bazaar per se, but the news story is that they are looking at getting into hospitals. This is what we put out yesterday. As an investor, how do you look at it? I mean, largely a platform company now getting into the healthcare space. And anything you say is not to be construed as investment advice. So go on. Feel free.
Right. I think, again, without specific reference to any platform, I think healthcare is a space. Healthcare is a space we are quite optimistic. We see large opportunities because if you look at the large hospitals, right, which where also the stocks are done very well, their ARPOB are like 70,000 rupees, which is considered quite high for, let's say, if you were to consider the income of majority of Indians. So there exists a large opportunity to provide affordable healthcare and with affordable insurance coverage. So I think there's a large, again, untapped opportunity there, but that's out there. How to capture it, what kind of plans one would make, and what kind of capex it will require. That I think someone needs to do much real work on. I would also have to highlight one thing. Ultimately, as stock investors, we make money on the profits, not on the TAM expansion. On that, we make money on corporates capturing that in profit in the profit after tax and delivering good return ratios, and that will come through execution. But top down is the space of affordable healthcare, affordable insurance. That space as such is quite exciting.
Okay, all right. Rana, we'll leave it on that note for today. Thank you very much for joining in and giving us some perspective on the market. The market, by the way, I mean, it's such a quiet start, but it's now trying to build a little bit, 45 points up on the Nifty. You've got some red on the mid-cap screen, so let's see how that goes along. Still about a 180-point dip on the mid-cap index. So a bit of a diverging trend. It looks like there's some interest in large caps and profit-taking continuing on the mid-cap side. Let's move